No clocks, no windows, confusing carpet patterns, and oxygen-enriched air. Behind the glamorous facade of Las Vegas or Macau lies a cold, calculated mathematical matrix designed with one absolute certainty. The longer you stay, the closer your probability of losing everything approaches 100%. Walk into any major casino resort, and you are stepping inside a multi-billion-dollar psychological trap built on deep behavioral economics and precise statistical engineering. How do these massive empires consistently bring in tens of millions of dollars every single day, while offering game after game where players occasionally win millions in cash on live television? Welcome to BizBlueprint. Today, we are going to reverse engineer the financial architecture of the casino industry, dissect its hidden operational costs, and uncover the brutal mathematical models that turn human psychology into predictable corporate cash flow. To understand the core economy of a casino, we have to look past the neon lights and card tables. Historically, gambling was a high-risk, unregulated underground business. Today, it is an institutional asset class dominated by public corporations and sovereign investment funds. However, unlike traditional entertainment businesses that sell a concrete product or service, casinos sell an intangible commodity, the thrill of uncertainty. To make a volatile commodity highly profitable, the entire casino ecosystem is engineered as an aggressive trap, designed to maximize a metric called time on device. The longer a customer plays, the more the law of large numbers takes over, ensuring the casino extracts a precise percentage of every dollar wagered. To build this perfect ecosystem, casino operators deploy massive upfront capital, leading us to our first core pillar. Capital expenditure, or CapEx. Developing a modern mega casino is one of the most capital-intensive undertakings in corporate history. Building a premium resort like the Bellagio in Las Vegas or the Marina Bay Sands in Singapore requires an initial CapEx injection, ranging from $2 billion to over $5 billion. This capital is meticulously split into three strategic buckets. First, structural architecture and layout psychology. Casinos spend hundreds of millions designing labyrinth-style floor plans. The walkways are deliberately curved to gently force you past rows of flashing slot machines, and the exits are intentionally obscured to make leaving as difficult as possible. Second, sensory engineering. Casinos invest heavily in advanced environmental controls, pumping proprietary ambient scents through the ventilation system to reduce stress, while keeping lighting levels low and constant to eliminate your biological perception of time. Third, high-tech asset acquisition. A single modern digital slot machine costs between $15,000 and $25,000. A large casino floor hosts thousands of these machines, alongside biometric security networks and eye-in-the-sky overhead camera systems capable of tracking the spin of a roulette ball and scanning the faces of thousands of players simultaneously. This monumental CapEx creates the physical cage. But as we will see in our second pillar, operational expenditure or OpEx, the recurring costs of keeping this cage open are staggering. Running a 24-hour gaming empire requires immense daily cash burn. A Tier 1 casino resort faces fixed and variable OpEx that can easily surpass $2 million every single day. The first major component is hospitality, overhead, and complementary distribution, or comps. To keep high-rolling players at the tables, casinos give away luxury suites, private jet transfers, Michelin-star meals, and top-shelf alcohol completely free of charge. This is not corporate generosity. It is a calculated operational expense. An intoxicated player who stays at a blackjack table for an extra 3 hours will lose far more money than the cost of a premium bottle of whiskey. The second major OpEx component is labor and specialized security. Casinos employ thousands of dealers, pit bosses, hospitality staff, surveillance analysts, and internal data scientists who monitor real-time betting patterns to spot card counters or mechanical anomalies. Finally, casinos face massive regulatory compliance and licensing costs, alongside intense utility and computing power expenses, to keep millions of digital lights, screens, and servers running every fraction of a second without a single moment of downtime. With such heavy daily overhead, how do casinos guarantee their revenue streams remain completely immune to bad luck? This brings us to our third pillar, the monetization matrix and the financial reality of the house edge. A casino generates cash across three distinct verticals: gaming revenue, hotel hospitality, and food, beverage, and retail entertainment. While hospitality and retail bring in massive secondary cash, the primary financial engine is the gaming floor, which operates on an absolute mathematical concept called the house edge. The house edge is the statistical advantage built directly into the rules of every single game. For example, in European roulette, there are 37 pockets, but the house payout for a single number win is only 35 to 1. That tiny mathematical gap creates a fixed house edge of 2.7%. In blackjack, because the player must draw cards first and can bust before the dealer even plays, The house holds an intrinsic advantage of roughly 1 to 2%, even against skilled players. On slot machines, the house edge is digitally programmed to sit anywhere from 5 to 15%. You must realize a fundamental truth. The casino does not care if you win $1 million tonight. To the corporate balance sheet, individual wins and losses are just temporary statistical noise. The casino views your money as a volume game. If a slot machine processes $10 million in total wagers over a weekend with a 10% house edge, the machine is mathematically guaranteed to retain $1 million in gross revenue. The base ticket of admission to a casino is completely free, making the gaming floor a massive psychology funnel that converts your time into a highly predictable, high-margin retail product. This absolute statistical certainty brings us directly to our fourth pillar, the margin profile and the brutal reality of the break-even point. Because a casino's core revenue is driven by pure mathematics, their gross margins on the gaming floor are incredibly high, often hovering between 60 and 70%. However, once you factor in the massive daily OpEx of luxury comps, massive labor costs, and heavy gaming taxes, which can reach up to 40% of gross gaming revenue in markets like Macau, the net profit margin of a casino resort typically settles between 15 and 25%. To achieve their break-even point every single day, a mega resort relies entirely on a massive, consistent load factor of foot traffic and high rolling volume. If the tables sit empty or a geopolitical event halts international tourism, the fixed costs of running a multi-billion-dollar facility will drain their cash reserves at an alarming rate. Furthermore, the primary risk to a casino is not a lucky player, but a shift in consumer behavior. Younger generations are increasingly abandoning traditional slot machines and table games in favor of digital sports betting and online casinos. This forces physical operators to continuously deploy heavy capital to redesign their spaces into non-gaming entertainment hubs, just to protect their foot traffic. In summary, the economic blueprint of the casino industry exposes the ultimate intersection of mathematics and human psychology. A casino is a physical manifestation of a financial market where the broker controls all the variables, dictates the rules, and legally tips the scales in their favor. They do not need to cheat you because the math will always do the work for them. They built a glamorous playground, but beneath the velvet curtains and gold trim, it is a highly efficient processing plant designed to systematically separate you from your wealth. What is the maximum amount of money you have ever lost or won at a casino? And do you think physical mega resorts will survive the massive global shift toward online gambling? Let us know your thoughts in the comments below. Do not forget to hit like, subscribe, and turn on the notification bell so you never miss the next corporate breakdown from BizBlueprint. Thank you for watching, and see you next time.